The silver market is approaching a moment that rarely appears in financial history, and when it does, it doesn't whisper, it breaks with force. What we're seeing today is the convergence of multiple long-term variables, each powerful on its own, but collectively transformative. Silver is standing at the edge of a structural shift driven not by speculation, but by math, physics, and global industrial reality. And when those factors align, markets don't simply move, they reset. For years, silver was treated as a secondary metal, overshadowed by gold's traditional safe haven reputation, but the world has changed. We are in the middle of the largest technological transition in a century: electrification, renewable energy, autonomy, digital infrastructure. Every one of these megatrends relies on silver. It's not optional. It's fundamental. Solar panels require silver for conductivity. Electric vehicles cannot operate efficiently without silver-based components. And our expanding digital world, from 5G to advanced computing, depends on silver's unmatched electrical and thermal properties. What's remarkable is that demand is accelerating faster than the mining industry can respond. Silver is rarely mined on its own. It is primarily a byproduct of copper, lead, and zinc mining. That means even if silver demand doubles, supply cannot double with it unless those other metals experience their own production booms, which they are not. The imbalance is structural, not cyclical. We are seeing a widening spread between what industries require and what miners can deliver. Markets eventually wake up to these discrepancies, and when they do, they adjust sharply and suddenly. Layer onto this the global macro environment. Economic uncertainty, currency pressure, geopolitical instability, and shifting monetary policy have created conditions where investors are searching for assets that can serve dual roles, both industrial drivers and hedges against volatility. Silver sits uniquely at that intersection. It has utility, it has scarcity, and now it has the global narrative of resilience. When financial systems undergo stress, people don't simply chase yield, they chase truth. And the truth is that silver has been undervalued relative to its strategic importance for far too long. We're also witnessing renewed institutional participation. Large capital flows aren't emotional, they're analytical. They follow data, trends, and asymmetric opportunity. When institutional money begins accumulating a commodity that has a supply deficit, rising industrial demand, and a technical setup that resembles the early stages of a breakout, the direction becomes increasingly clear. These shifts usually begin quietly, then accelerate explosively when momentum flips from accumulation to recognition. Technologically, the future is pushing silver further into irreplaceable territory. Solar installations are scaling globally, and the efficiency requirements of new technologies demand higher silver loads, not lower. Electric vehicle adoption is not a temporary spike, it is a global commitment. Data centers, automation, robotics, and digital infrastructure are becoming more energy intensive, not less. Each of these sectors intensifies silver usage at a pace the world has never experienced. This is why the phrase, "the silver market is about to break," is not hyperbole. It's an acknowledgement of pressure meeting resistance. When supply is rigid, demand is accelerating, and sentiment begins to shift, markets don't politely adjust, they reprice. And that repricing phase captures attention because it looks sudden. But it's never sudden. It's the result of years of underlying tension. So we stand at a moment defined not by headlines but by fundamentals that have been quietly reshaping the future. The signs aren't subtle anymore. They're obvious: industrial load, technological dependence, constrained supply, rising investor interest, macro uncertainty. These forces are building a wall of pressure behind silver. And once that pressure reaches its breaking point, it won't just push the market higher. It will reveal what silver should have been valued at all along. The silver market is moving toward a moment that will not simply be remembered, it will be studied. What we are witnessing is the culmination of structural pressures that have been building for years beneath the surface. And now those pressures are aligning in a way that signals a historic breaking point, not a temporary surge, not a speculative spike, a fundamental shift driven by technology, scarcity, and macroeconomic realignment. Silver has always been unique, but today it stands at the crossroads of two massive global transformations: the shift toward renewable energy and the acceleration of electrification. These forces are non-negotiable. They are not based on sentiment, they are based on necessity. Solar technology requires silver for conductivity. Battery systems, power electronics, autonomous systems, and high-performance chips rely on silver's unmatched efficiency. Every electric vehicle on the road increases industrial silver consumption. Every solar panel deployed adds to long-term demand. Every step toward digital infrastructure intensifies the world's dependence on this metal. The challenge, and the reason this moment is so historic, is that supply cannot keep up. The majority of global silver production comes as a byproduct of mining other metals. That means silver output cannot scale just because the world suddenly needs more of it. Even with rising prices, production responds slowly, if at all. Meanwhile, global industrial demand is rising sharply. This disconnect is not cyclical, it's structural. And structural disconnects do not resolve gradually, they resolve through breakouts. As the world moves deeper into an era of energy transition, new technologies require higher purity, higher conductivity, and more reliable materials. Silver sits at the center of that demand curve. At the same time, mining investment has lagged. Ore grades have declined, production costs have risen. Many traditional mining regions are facing regulatory pressure or geological depletion. You cannot manufacture supply out of thin air. And when industries rely on a resource whose availability cannot expand proportionally, the market begins to strain. Layer onto this the macro environment. Central banks are shifting, inflation pressures remain embedded, and geopolitical instability is creating an undercurrent of anxiety throughout global markets. Investors are searching for assets that offer both utility and protection, a rare combination. Silver fits that profile in a way few assets do. It benefits during economic expansion because its industrial demand rises. It benefits during uncertainty because it acts as a store of value. This dual identity is one of the most powerful catalysts behind the current tightening in the market. We are also seeing changes in investment behavior. Institutional flows into precious metals are rising. Long-term holders are accumulating. Retail participation is increasing. These aren't emotional impulses, they are dated, driven responses to a market that has been undervalued relative to its global importance. When long-term capital begins positioning itself ahead of major technological cycles, it signals recognition that a fundamental repricing may be near. Technological adoption curves tend to start slowly, then accelerate exponentially as infrastructure expands. Silver demand is tracking that same pattern. Solar deployment is growing worldwide. Electric vehicle adoption is scaling. Artificial intelligence, data centers, automation, robotics, 5G networks, each of these requires more energy, more connectivity, and more advanced materials. Silver's role increases with each leap forward. This is why the phrase historic breaking point is not exaggeration. The conditions forming today resemble the early stages of long-term commodity revaluations: tight supply, expanding utility, rising cost structures, and a macro environment pushing investors toward tangible assets. When all of these forces converge, the market doesn't inch forward, it snaps into a new range. The silver market right now is not simply tightening, it is recalibrating. Industrial demand is rising faster than production. Investment demand is accelerating. Global uncertainty is pushing capital toward real assets. And as these pressures collide, the market approaches a moment where the existing price no longer reflects reality. That moment, the breaking point, is getting closer. And when markets reach that point, they don't just move, they transform. The silver market is approaching an inflection point, the kind that doesn't emerge from hype or speculation, but from undeniable shifts in global technology, industrial demand, and economic behavior. What's forming right now is the foundation of a breakout that many analysts have anticipated for years, yet few truly understand. Silver is no longer simply a precious metal. It has evolved into a strategic asset powering the technologies that will define the next decade. And when an asset with this level of utility becomes undervalued for too long, markets eventually correct with force. Silver's role in the modern world is expanding at a pace that is both measurable and unavoidable. The clean energy transition alone is rewriting the demand curve. Solar energy, now one of the fastest growing power sources, relies heavily on silver's superior electrical conductivity. Every new panel installed increases demand in a way that is not substitutable. As nations accelerate their renewable targets and industries adopt green infrastructure, the industrial appetite for silver intensifies. Companies are no longer experimenting with solar, they are scaling it. And scaling requires materials that work, not materials that are convenient. Silver is one of the few that meets the performance threshold. Electric vehicles add another layer of structural demand. The electrical systems, battery connections, onboard electronics, and fast charging components all incorporate silver to maintain efficiency and safety. As EV adoption accelerates globally, silver usage rises with it. This is not speculative, it is engineered into the design, and when you combine the needs of solar, EVs, and all electrification technologies with the explosive growth in data centers, advanced computing, robotics, and automation, the pressure on global silver supplies becomes unmistakable. The supply side tells an entirely different story, one defined by constraints. Silver is primarily mined as a secondary output from lead, zinc, and copper production. That means silver supply cannot grow dramatically unless those base metals see strong, sustained expansion. But they are not. Many mines are aging, ore grades are declining, and new large-scale projects take years to finance, permit, and construct. Even higher prices are unlikely to trigger immediate production increases. The market is tight, and it's getting tighter. This structural mismatch, rising industrial demand and limited production growth, is not a temporary imbalance. It's the kind of setup that leads to major market repricing. History has shown that commodities experiencing this kind of squeeze rarely move gradually. They build pressure quietly and release it explosively. Silver is following that blueprint with remarkable precision. At the same time, macroeconomic forces are amplifying the potential breakout. Inflationary pressures may cool, but they are not disappearing. Currency volatility remains a global challenge. Geopolitical fragmentation is creating the kind of environment where investors seek assets that offer both stability and long-term value. Silver sits in a rare position, part industrial engine, part financial hedge. That dual identity becomes incredibly powerful when markets enter periods of transition. Investment behavior confirms the shift. Institutional interest is rising. Physical demand is increasing. Long-term holders are accumulating, not distributing. This is often the early sign that the market is preparing for a new pricing regime. These investors are not reacting to short-term noise. They are positioning for structural change. And structural change is exactly what silver is experiencing. Technological innovation adds an even more compelling layer. The energy grid of the future will be more electrified, more distributed, and more dependent on high-efficiency materials. Silver is already embedded in that vision, not as a luxury metal, but as a functional necessity. When technologies advance, they typically demand more of the materials that maximize performance, not less. Silver's role expands with every new breakthrough. This is why the phrase, "the breakout everyone is waiting for," resonates so deeply right now. The world is not guessing. The data is pointing in a clear direction. Tight supply, surging demand, rising strategic relevance, shifting global economics, and accelerating tech adoption are converging. When markets face a convergence this powerful, they don't drift, they surge. The silver market is nearing that surge. The breakout is forming, and once it ignites, it has the potential to redefine how the world values one of its most essential metals. The silver market is moving into a phase that can only be described as structural pressure, the kind that forms quietly over years, then reveals itself suddenly in the price charts. What we are witnessing right now is not a speculative surge, not a temporary reaction to news, but a deep systemic tightening driven by technology, industrial necessity, and long-term underinvestment in supply. When a market builds this kind of pressure, history shows us that it rarely releases slowly, it breaks, and when it breaks, it revalues. Silver has always carried a dual identity: industrial workhorse and financial store of value, but today, that duality is becoming its greatest catalyst. The modern economy is undergoing a transformation unlike anything we've experienced in the last century. Electrification is accelerating. Renewable energy is scaling faster than earlier models predicted. Digital infrastructure, autonomous systems, artificial intelligence, and robotics are reshaping how industries operate. Behind every one of these innovations lies an element that is becoming indispensable: silver. The industrial demand curve is not just rising, it's evolving. Solar energy is the clearest example. As efficiency requirements increase, the amount of silver needed per panel remains significant. The global push toward carbon neutrality is pushing nations to expand solar capacity at unprecedented speed. Every new solar installation, whether rooftop, industrial, or utility scale, pulls more silver from a market that is already struggling to maintain balance. Electric vehicles add another layer of consistent demand. Their electrical systems rely heavily on silver's conductivity, reliability, and performance under high load. The shift toward high-voltage architectures, fast charging, and advanced safety systems only increases the metal's importance. And unlike some materials that can be substituted when prices rise, silver's properties make substitution extremely difficult without compromising performance. This is where the pressure truly builds. Supply cannot keep up. Silver mining has not expanded to match the accelerating demand. Most silver is produced as a secondary metal during the extraction of copper, zinc, and lead. Because of this, primary silver supply cannot respond rapidly to price signals. Even if silver prices surge, production remains constrained unless base metal mining also expands. But many of those mines are aging, operating with declining ore grades, or facing rising operational costs. The takeaway is simple: supply is rigid while demand is increasingly elastic. Long-term underinvestment amplifies this imbalance. Mining companies have been cautious for over a decade, focusing on efficiency rather than expansion. Exploration budgets remain limited. New mining projects require extensive permitting, environmental review, and capital investment. These are multi-year processes. The silver market cannot simply turn on new supply when demand spikes. That rigidity becomes the pressure valve. Overlay this with global economic conditions. Monetary policy is shifting. Inflation concerns persist. Investors are reassessing risk, seeking assets that offer durability in an uncertain environment. Silver's rare dual role, industrial necessity and financial hedge, places it in a category that becomes more attractive as volatility rises. When capital begins rotating toward assets with intrinsic utility, the market dynamic changes rapidly. What's equally important is the behavior of large, long-term investors. Accumulation is increasing. Physical demand remains historically strong. Investment flows show a preference for tangible assets with real-world use cases. These are not signs of fear-driven buying. They're indications that sophisticated investors are positioning ahead of a structural repricing. Technology accelerates the timeline. Every year that electrification expands, every gigawatt of solar added, every autonomous system deployed, tightens the supply-demand gap further. These trends do not reverse, they compound. This is why the phrase "a major break is coming" isn't dramatic, it's analytical. The ingredients of a major breakout are all present: constrained supply, surging industrial demand, rising strategic importance, economic uncertainty, and shifting investor psychology. Markets under this type of pressure do not move gently. They snap into a new range, and the silver market is approaching that snapping point.